Strong order book, net debt-free company, and clientele from more than 100 countries. TD Power Systems Ltd, an electric generators and motors manufacturer. Company has more than 25 years of experience in manufacturing different types of generators and motors, which are used in diverse industry segments, and has a strong order book of Rs 1,234 crores, out of which about 30% of orders are from railways. The company was incorporated in 1999 and got public in 2011. They are based in Bangalore, with more than 450 employees and 400 workers. Company has 2 manufacturing plants in Bangalore and 1 global plant in Istanbul, Turkey. The market cap of the company is 6,972 crore rupees and currently trading at 446 rupees per share. The company has a 19% CAGR for 3-year sales growth and 44% CAGR for 3-year profit growth. Company has 4 wholly owned subsidiaries in India, USA, Germany, and Turkey. The sales of the company for the last 4 years have been consistently growing. The profits of the company are also increasing from year to year. There has been no drop in the promoters' holding in the last 4 quarters. We can see a good portion of foreign and domestic investments in the company. Public holding is dropping, indicating that foreign investors are buying from the public. The company is giving good dividends every year. A dividend of 1 rupee and 10 paise per share was paid in fiscal year 2024. Company exports to more than 100 countries, with revenue concentration of 57% from domestic and 43% from exports. Some clients of the company are Siemens, ADNOC, Saudi Aramco, Alstom, GE, Voith Hydro, Shree Cement, Indian Railways, Triveni Turbines, and more. Top 10 clients contribute about 70% of the total revenue, indicating high client concentration. Company has secured many multi-year contracts this year and is setting up a new manufacturing plant on 15 acres in Tumkur, Karnataka, to address the growing demand. Thanks for watching. If you like this video, please give a thumbs up and consider subscribing to the channel. See you next time.